The tariff chaos continues as earnings season gets underway. Tech stocks are climbing after the White House said that computers and smartphones would be exempt from tariffs on China, but President Trump now says that won't be for long. We'll learn more this week about how corporate giants are assessing the impact of tariffs as earnings season gathers pace. Up after the European close today is Europe's largest company, LVMH. Well, Fiona Cincotta is a market analyst at City Index. Fiona, let's start with LVMH then. What are we expecting?
Yeah, so it's going to be a lot of attention on these numbers. This is one of the first really major companies to be reporting here in Europe. Ahead of sort of falling earning expectations and after that violent sort of equity sell-off that we've seen. Expectations, obviously we're expecting to be a sort of level of uncertainty surrounding the outlook, given that there is so much uncertainty surrounding the Trump tariffs, but also, potential for upending the global supply chain. But really, I think the focus is going to be on what's happening in the US. Are we going to be seeing slowing fashion sales and leather goods sales? Because there had been this optimism that strength in the US could offset weakness that had been in China, but that suddenly looks like it may not be the case. And if we do see those concerns over sort of recession in the US and hitting the consumer, then that could mean that we see those sales over there weaken.
How vulnerable is the luxury sector to tariffs? How vulnerable is the supply chain?
I think, there is definitely a level of vulnerability, not only with the supply chain, which, yes, there is some vulnerability there, but also confidence. People buy luxury because they're confident in the future. And I think that that's something that's going to be hit hard, or we've seen it is being hit hard. We're seeing consumer confidence really taking a hit. So, although we might see price increases because of those supply chain issues, I think the bigger concern is actually going to be worries about destruction of wealth, which may be coming through as a result of these tariff uncertainties.
Elsewhere, President Trump said on Sunday he'll announce a specific duty on semiconductors at some point this week. What impact could that have on the market?
Yes, so more news coming through, headlines literally coming through almost by the day and the hour as far as tariffs are concerned. But I think, this is a move that would be aimed at encouraging chip manufacturing to move back to the US. Now, the problem that there is at the moment is that the US is not able to handle domestic demand for chip manufacturing. So any sort of moving of supply chain there would take some time. It would involve heavy investment from companies. But it also means, because the domestic demand can't be dealt with, that those chip price increases will be coming. That means consumer goods will see the increase in prices as they're handed over or passed over to the consumer. So I think this is bad news as far as the consumer is concerned. It's bad news as far as inflationary pressures are concerned. And it's bad news for the semiconductor chip producers as well, because they will need to be moving their supply chains as well.
With this level of uncertainty, though, Fiona, is there really an incentive for multinationals to move manufacturing to the US?
Well, it's a really good question, because there does have this sense that whilst this is the message from the White House this week, who knows what it's going to be next week. But I think at the end of the day, when companies do have to get on with planning for their future, and if this is what is being said that's going to be the future, then there is good reason to invest in the US, because it does mean that they will be able to sort of get past those tariffs. So there is, I think, a longer term motivation to do it. But for the time being, as I said, there's still a lot of uncertainty.
What else will you be listening out for in a very busy week of earnings to try and find out more about how corporates are planning to cope with this uncertainty?
Yeah, so, guidance is going to be everything here. We've obviously got quite a wide range of companies reporting, from more US banks, which are very economically sensitive, particularly the investment banks, which are more economically sensitive, so can give more of an idea, I think, of what the expectations surrounding recession are going to be. But then also companies such as Netflix, which are reporting later this week, could give some ideas of if there's any expectations of consumers expected to be reining in their spending on items such as this, or if there's a global impact and a global sort of hit, if you like, from other countries, from people in other countries that are sort of taking a stand against what's happening. So I think there is plenty to be watching out for as far as earnings are concerned. And then even on the macroeconomic front, we've got Federal Reserve Chair Powell, who's also speaking this week, and I think that will be another very, very important event for the calendar.
That was Fiona Sinkosha of City Index. Don't forget, you can watch more videos on Reuters.com.